So what gives with all this talk that America and its currency are so weak? I'm joined by our panel, Jonathan Hoenig from Capitalist Pig Asset Management, John Layfield from Northeast Securities, Nancy Skinner, radio talk show host, and Mike Norman of Economic Contrarian Update. All right, Mike, what do you think? America still the safe haven?
Without question, Stuart. Look, we have the largest economy in the world. We have a legal structure and a regulatory environment that, treats people fairly. We have a very transparent economy here. Even though the dollar has declined somewhat in the past 5 years, it still remains the global reserve currency. And there's another thing, Stuart, which is beyond economics. The United States is the last remaining superpower, and geopolitical muscle counts for a lot. And safe havens can only be a safe haven in any duration with geopolitical muscle, and the U.S. has it in spades, in abundance.
Nancy Skinner, is there any other game in town?
I think the euro is another game in town that people have to decide, investors, because, look, we've got this falling dollar. We had news today that there was a decline in durable goods, much less than they expected, and this all falls on the housing market decline. And so there's a lot of concern out there about actually investing in the U.S. market versus the euro, which hit a high of $1.50, so £1.50. So it's to say that there's only one game in town is not true. People are buying euros in the aftermath. That's another great security.
Nancy, that's one aspect of all the qualities necessary to create a safe haven. Yes, the dollar versus the euro, the dollar has come down versus the euro. There's no question about it. However, central banks still hold a majority of their reserve holdings in dollars. Now, that amount has come down, but it's still about 55%. The dollar is still the world's global reserve currency. In addition to the other factors, look, if you're talking about real estate prices coming down, they're coming down in England. They're coming down in other countries, too. So don't point at the United States and say we have a weak housing market when other countries are having the same thing.
John Layfield, come into this.
I think Mike is right about this. Look, the real reason that people are going to come to us for safe haven is the fact that we have $4.9 trillion in debt that we can get people in and get people out of. The only thing closest to that is Japan at $4.6 trillion, but their yield is less than half of what America's is right now. The fact is the dollar is getting weaker, but people are still going. Look, from 2001 till now, the long-term bond is relatively flat because of overseas demand. You have petrodollars going through UK hedge funds have gone from 4% of our money to 11% of our money. This is where money is going. They are diversifying, yes, but they are still, and for the foreseeable future, going to stay with us.
Now, you can make this as complicated as you want, John. I mean, look at the lower left-hand corner of your screen. Are we the safe haven? The market down 200 points today. The dollar dropping like a stone today.
Of course we are,
Jonathan. You cannot make the argument that the U.S. is a safe haven today.
Look at one day that the market was down.
We're talking about the reaction to the news, guys. That is what we're talking about.
Jonathan, there's nobody on Wall Street today. There's nobody there. You're trading a little.
Can I jump in for a second? Jonathan, I got to take issue. Jonathan Hoenig, I've got to take issue with this because the word safe haven is not necessarily implying an economy that's booming or a currency that's extremely valuable and going up in value. It's all about the rule of law. It's about a democracy which works.
Absolutely.
It's about being able to make money and keep it without fear of expropriation. When everybody else is going to chaos, we got it.
They have that in Europe, too. But they have that in Europe, Stuart, as well. And what they don't have are the massive deficits that we have rung up here in the United States. This is really on the investors' minds as we just keep going deeper and deeper.
I'm sorry. I am a European. I know whereof I speak. Do not talk to me about Europe not having massive deficits. Frankly, madam, they do.
Japan has a public debt.
They had to maintain a certain percent for the euro.
Here are some facts. The United States ranks among the lowest of industrialized countries when you look at its debt in relation to its economy. Japan has a public sector debt 140% of its GDP. We have a public sector debt. Hang on, Jonathan. 66% of our GDP. We're very fiscally. We're very sound. We're fighting two wars. If we weren't fighting a war, we'd be in a surplus, Nancy. You don't know what you're talking.
Jonathan Hoenig.
And we send hundreds of millions of dollars a year to this lunatic country every year. $10 billion we've sent to Pakistan since 2001. And what has it given us? Nothing. And our president today, guys, was weak. I think that's why the market was down so much.
Well, Jonathan,
he could not even get the words militant Islam out of his mouth.
John Layfield,
I mean, who does the president think did this? You're on Vandersloot? Come on.
John Layfield.
I tell you what, I think Jonathan is right about this. Our foreign policy is abysmal. Look, Bush went and visited Pakistan and gave them permission, basically, to have nuclear power. He got on Israel. He got on India for being out of the non-proliferation treaty. Look, India's our friend here. Pakistan, we're not sure about. We are sending hundreds of $1 million. We are fiscally irresponsible. But the question is, are we the safe haven? Yes, we are. The numbers don't lie.
What sort? Gold? What sort? Gold and oil, okay? And that when you have an assassination in a country with a nuclear arsenal, gold and oil, that's what really soared in this action.
And that is the last word.
Sword! What are you talking about?
The last word.
You've got nobody on Wall Street.
The last word went to Nancy Skinner. And we thank you one and all for being on the panel today. Appreciate it. Thank you.